Staring at a standard stock chart feels like navigating a chaotic storm, but apply specific mathematical filters, and that noise resolves into parallel, readable streams. In this lesson, we are building a custom 5-moving average chart. You can think of this as a diagnostic tool that strips away the daily fluctuations to reveal the underlying trend of a stock. To set this up, you must use a standard broker platform like Sirotha or Angel One. Avoid the free TradingView app for this specific strategy, as it limits you to only 2 indicators, and our diagnostic engine requires 5. You also need to set your time frame to daily, or 1D. An EMA, or exponential moving average, is a line that tracks the average price over time, with more weight on recent days. Our specific EMA sequence is calibrated for daily closing prices and will not provide the same clarity on hourly or weekly charts. Establishing these strict platform and timeframe prerequisites is the only way to filter out short-term market noise and see the mathematical direction of a stock. Open your platform's indicator menu and add the exponential moving average tool exactly 5 times. Now, go into the settings for each EMA and configure the lengths to this specific sequence: 9, 20, 50, 150, and 200 days. Next, we need to standardize the colors for these lines. Having a uniform color code allows the entire trading community to read your chart screenshots instantly without needing a legend. For short to medium-term indicators, set the 9 EMA to yellow, the 20 to black, or white on a dark background, and the 50 EMA to blue. For macro trend indicators, set the 150 EMA to green and the foundational 200 EMA to red. By applying this specific numerical sequence and uniform color palette, you've transformed a chaotic price chart into a structured, visual language. Now that the lines are set, we can identify a perfect uptrend by looking at the vertical stacking order of the EMA ribbons. Here is the required alignment. The price sits highest, followed by the yellow 9, black 20, blue 50, green 150, and red 200 at the bottom. When maintaining this sequence, all short, medium, and long-term trends move in the same direction. We can use the same logic to diagnose the inverse scenario, a perfect downtrend. In a perfect downtrend, the foundational red 200 EMA sits at the top. Below it, the lines stack sequentially down to the yellow 9 at the bottom, with the price action pinned underneath. This reverse stacking confirms heavy selling pressure. Checking for these alignments provides a visual filter, helping you stay synchronized with the prevailing trend rather than trading against it. While the 200-day line is foundational, it also lags. Because it averages nearly a year of data, it takes a long time to react when a stock begins to shift direction. To spot these shifts early, we look for partial trends. This involves focusing on the 3 fastest lines and temporarily setting aside the slower ones. You have a partial uptrend if only the yellow, black, and blue lines stack upward, regardless of the green and red lines' positions. If that sequence inverts, with blue on top, then black, then yellow, you are looking at a partial downtrend. Beyond the order of the lines, we can also gauge the intensity of a move by using the gap rule. As you see in this example, when the vertical gaps between the lines noticeably widen, it indicates the trend is accelerating. Compare that to a sideways market. Here, the lines collapse into a tight braided cluster. It is generally best to stay away from taking new positions when the lines are tangled like this, as it indicates a lack of momentum and higher volatility. In short, the vertical order tells you the direction, while the size of the gaps tells you the strength of the move. With this setup, you have moved from guessing based on price spikes to diagnosing the chart through a rule-based framework. To practice this, open your chart today and hunt for one stock in a perfect uptrend and one stock in a perfect downtrend. Take screenshots of your findings and share them in the community group so we can review the alignments together. Now that you can diagnose the trend, the next step is execution. In our next video, we will use these lines to identify specific buy and sell strategies, including the golden cross. Building the chart is just the first step. The real benefit comes from training your eyes to identify these structural patterns in live markets every day.